Hello, my name is Steve Bigelow with the Candlestick Forum. A lot of people ask us, how do we get a little bit ahead? There's basically a very easy winning trend trading strategy when you're using candlestick analysis. First thing we want to analyze is the direction of the market. We also have an extremely effective T-line rule. The T-line is a very strong indicator of what's happening in investor sentiment. And you add that to the fact that if you see a candlestick sell signal and a close below the T-line, the probabilities become immense that you're going to be heading to a downside. As we saw on Friday's trading, the Dow hovered right here at the T-line most of the day, but then sold off. That is a strong indication that bullish sentiment has not yet come into this market. There's still bearish sentiment, probably more downside with your stochastics heading down. You also saw additional confirmation that the NASDAQ traded right up to the T-line area, and it closed back lower. Once again, anytime you're trading below the T-line, you can make a very strong assumption that bearish sentiment is in control. So that keeps you from getting whipsawed. If you were short in the markets, you kind of stay there until you see a candlestick buy signal and a close back up above the T-line. Additional confirmation also from the S&P 500. What's the logical target area? Down here to fill this gap at the 50-day moving average. So the winning kind of trend trading strategy is, if you know the market's in a downtrend, you want to see which sectors have the strongest downtrend. Right now, apparel stores, footwear, and coal all have strong bearish indications. So as you can see on Urban Outfitters, your bearish Harami, your bearish engulfing, closed below the T-line, followed by Friday's gap down. Where's the next likely target? Lulu also had bad earnings. So take a look at some of these. They're all in downtrending direction. Coal companies. NC, for example, wave 1, wave 2, now broken down into wave 3. Again, a few others that are very strong downtrending stocks in that sector. And the footwear sector, Foot Locker. You can see the little evening star type signal. Bearish Harami again, coming back and trading below the T-line, stochastics heading down. There's a gap to fill right here at the 50-day moving average. Crocs, Skechers, WEYS, and Shoe also in downtrends. So there's a very simple adage in candlestick analysis. The bigger the signal, the more compelling there's been a major change of investor sentiment. So this allows us to identify that if this opens lower on Monday, you've got a bearish doji sandwich, which is also telling you that the 50-day moving average is not acting as support. Where's your next likely target? Down here at the 200-day moving average. And Lulu did have bad earnings. So there's your bearish best friend. When they gap it down that big, that's usually going to have a lot of follow through. So using the signals and patterns, for example, there's our J-hook pattern. We're calling this a J-hook plus because notice where it's occurring, right at a level that everybody else is watching, the 50-day moving average. What type of pattern is it further confirming? There's your fry pan bottom. Where's your next likely target? Well, if everybody is watching to see that it's supporting at the 50, they're now watching to see what happens if it goes to the next target, which is the 200-day moving average. This is not an unusual pattern. When you see that doji gap up, usually the next target off the 50 is the 200. This is reoccurring investor sentiment. All you have to do is analyze what the signals are, where they're occurring, and what type of pattern it's setting up, and you can greatly improve your probabilities of being not only in the right trade at the right time, but a very strong trade at the right time. So because of a computer goof up, my computer went down. We were supposed to be doing a J-hook pattern training on Saturday morning. We had to postpone it to tonight at 7 o'clock Eastern time. So if you've got time, it's probably well worth your while to see all the different J-hook patterns and which ones are the strongest J-hook patterns, whether it's your J-hook plus or your bobble breakout or confirming a classic pattern, a fry pan bottom followed by a J-hook. That'll be it. We'll see you in the chat rooms.